in order to be successful as a trader, and I'm talking about consistently successful where you don't make money every day, but you stay in the game and you make money most days. And in order to be successful and to do that, you have to know where the market is going. Now, of course, nobody knows where the market is going. Now, every day when I trade, I place the trading zone on my chart. And that trading zone, you see it as the rectangle on my chart, that I calculate using Taylor's trading technique or Taylor's book method. You've probably heard of it. Now, the targets that I use from Taylor, and I'm going to point them out to you here, they're the resistance at the top, the support at the bottom, and the range between them. These are three targets: the resistance, support, and the range. Okay, three targets. I'll explain in a minute. I also have the previous day's close as a target. And these are targets. Now, there are four targets that I've just pointed out of where the market is likely to go on any given day. Okay? There's also one other thing that the market does to provide us with targets, and that is to put in areas of support and resistance via price. Now, we can see that resistance was put in here at 44.64 on August 16th. And so support also down at the previous day's close at 44.54. And so this is how I determine where the market is likely to go. And again, the most important thing in being able to trade consistently and stay in the game is knowing where the market is going to go, or trying to know where the market is going to go. Now, of course, these targets are not always accurate. But one thing that's particularly accurate is, of course, the previous day's close. Another thing that's particularly accurate is the Taylor trading range. Now, here's the Taylor trading range for today, August 16th. Now, as you can see, prices traded outside the trading range toward the end of the day. So how do you determine, why am I saying that the trading range gives me an area to tell me where the market is likely to trade? Well, in order to do that, I take the Taylor trading zone and I transpose it. I make a clone of it, actually, and I take the clone and I move it to the intraday high or low, because, as I said, the Taylor trading range is particularly accurate at determining where the market is going to go. And in order to do this, I have to first determine where the intraday high or low is. Of course, if there was an intraday low that was put in, I would match the Taylor trading range to that low. But I matched it to the intraday high right here at 44.66. And I determined sometime during the middle of the afternoon that the prices were going to bottom out sort of down here at 44.23. And they did, okay? So when the prices were trading somewhere around here, and of course you see they hit the previous day's close, that again was a target line. And the Taylor trading range gave me an indication that the market was likely to go down to 44.24 based on the transposed trading range. Again, the trading range is particularly accurate. Now, let me do it on another day, the previous day, August 15th. Here's August 15th. During the day, for the most part, the target was the Taylor support level down at 44.68. And so where were the prices going to go at the end of the day on August 15th? Well, I saw that this was the intraday high, so I'm going to take my Taylor trading zone, and I'm going to again make a clone, and I'm going to transpose that clone. I'm going to move it down to the intraday high. And so having done this sometime in the afternoon gave me a good indication that prices were going to make a price point or price level down at 44.49, and they did. Okay, so that's 2 days. Okay, let me go back another day to illustrate this point. Here's another day, August 14th, where prices traded. Again, here was the target. The target was the previous day's close, and prices hit that target. They also hit and maintained a level around the Taylor resistance at 44.94. So where were prices going to end up for the day? Well, taking the intraday low being the low of the day, I took my Taylor trading zone and again made a clone. Do this, make a clone, and here this time I'm going to transpose it and I'm going to move it to the intraday low, which was right here at 44.69. And so prices closed out the day right here at 45.06, which was 4 points below the Taylor trading zone, but still within 4 points. So this is how I use Taylor together with the absolute resistance and support of the Taylor trading zone and the intraday and the previous day's close. So other than that, there's no way to determine where the market is likely to trade except using the market's own price points. Right here, the market put in a resistance. Over here, it put in a support. Over here, it put in a resistance. And that's another way of actually scalping, if you're going to do that, trading between the support and resistance levels. But the Taylor trading range is a particularly useful tool for determining where the market is likely to trade. And so again, knowing where the market is likely to trade, or trying to know where the market is likely to trade, is going to make a better trader and make you more consistent if you can determine where the market is likely to trade. So that's my video for today. Thanks so much for watching. Marv Eisen for Timeless Dollar Trading Academy, and I'll see you in my next video.